This is Alpha, a unique perspective on the market. Following the chart trends of the sentimental money model, we'll dive into today's pre-market observations on the U.S. stock market. Previous trading day. On Tuesday, September 2nd, U.S. stocks closed lower across the board on the first trading day of September. A sell-off in global government bond markets pushed up interest rates and put pressure on the stock market. The Nasdaq 100 led the decline, falling 0.84%. The S&P 500 fell 0.74%, and the Dow Jones Industrial Average fell 0.54%. Sectors. Declines were widespread, with technology, XLK, down 1.01%, industrials, XLI, down 0.95%, and financials, XLF, down 0.74%. The U.S. dollar index strengthened. Global government bond yields generally climbed, with the U.S. 10-year Treasury yield rising to 4.276%. The long Treasury bond ETF, TLT, fell 1.12%. However, due to market concerns about inflation and the independence of the Federal Reserve, safe haven demand surged, pushing gold prices to new all-time highs. The gold ETF, GLD, surged 2.36%, and the gold mining ETF, GDX, also rose 2.58%. The cryptocurrency market saw mixed performance. Amidst the market shock, the Bitcoin ETF, IBAT, transformed itself from Bitcoin back into Bitcoin Gold, rising 2.49%. However, the Ethereum ETF, ETHA, failed to become Bitcoin Silver, falling 1.58%. A global bond sell-off dragged down stocks. The primary driver of the market decline that day was a global sell-off in government bonds. Investors' concerns about the deteriorating fiscal outlook in many countries pushed up long-term Treasury yields, putting pressure on risky assets like banks and technology. After the market closed, a major announcement emerged. In the highly anticipated Google antitrust case, the judge's ruling was much milder than the market had feared, not requiring Google to spin off its core businesses, such as the Chrome browser. This news sent shares of Google's parent company, Alphabet, soaring 8% in after-hours trading. Data released that day showed that U.S. manufacturing activity contracted for the sixth consecutive month in August, showing signs of economic weakness. Amid investor concerns about global fiscal health and the independence of the Federal Reserve, gold, silver, and Bitcoin continued to be sought after as safe haven assets, with gold prices hitting another record high since last Friday. Next, let's take a look at some noteworthy stock news today. First news. This is the top news item in the stock market today, a one-win, all-win story featuring two tech giants, Google and Apple. In a high-profile antitrust case, a federal judge has just ruled that Google can retain its lucrative search agreement with Apple. The news sent both companies' stocks soaring, with Google's stocks surging over 7% in after-hours trading. This ruling has effectively cleared a significant cloud for both companies. For Apple, this means it has secured over $20 billion in annual toll revenue, which contributes up to 15% to its operating profit. This is undoubtedly a reassurance ahead of the September 9th iPhone launch. For Google, while the ruling requires it to share some search data with competitors, maintaining its partnership with Apple means it maintains its undisputed dominance in mobile search. This ruling is a significant victory for both parties and has made Wall Street analysts even more optimistic about their futures. Firms like Tigris Financial and JP Morgan Chase have given price targets significantly higher than their current share prices. Second piece of news. This is about Zscaler, ZS, a leader in cloud-native cybersecurity. While the tech sector is volatile due to tariffs, the company delivered a strong report after the market closed today. According to the financial report, fourth quarter revenue reached $719 million, a 21% year-on-year increase, and adjusted earnings per share were 89 cents, both exceeding market expectations. More importantly, the company's full-year revenue guidance for fiscal 2026 also exceeded Wall Street's forecast, projecting revenue between $3.27 billion and $3.28 billion. So what's behind these strong performance and guidance? According to the company's conference call summary, growth is primarily driven by strong enterprise demand in three key areas: AI security, zero trust, and data security. Zscaler's business in these areas is growing rapidly. For example, its AI security business has already exceeded $400 million in annualized recurring revenue, ARR. Overall, the company's total ARR surpassed $3 billion in fiscal 2025, making it one of only 2 pure-play SaaS security companies globally to reach this milestone. Furthermore, the company's operating profit margin reached a record high of 22.1%, demonstrating strong profitability while maintaining rapid growth. Third news. This is about PepsiCo, Pep, the household name in beverages and snacks. This century-old company has recently been targeted by an activist investor. According to reports, Elliott Investment Management, a prominent activist investment firm, has quietly acquired a $4 billion stake in PepsiCo. PepsiCo's stock price rose 2.2% following the news. Elliott isn't looking for a financial investment. Instead, it has outlined clear reform requirements, including recommending that PepsiCo refranchise its bottling business and divest non-core assets. Elliott believes these changes can boost PepsiCo's stock price by at least 50% from its current level. Why did Elliott choose to enter the market now? Primarily because PepsiCo is facing some real challenges. In the fiercely competitive soda market, its performance has lagged behind major rivals like Coca-Cola and Dr. Pepper. Financial data indicates weakening profitability, with net profit margins falling to 8.28% in the second quarter, while debt levels are also rising. Of course, PepsiCo's own management is also actively working to save itself. They plan to increase productivity by approximately 70% compared to the first half of the year by closing factories and streamlining staff in the second half of 2025. Now, with the entry of the barbarian Elliott, the pressure on PepsiCo's management will undoubtedly intensify. The market is eagerly awaiting the outcome of this palace coup that will drive deeper transformation at this giant. Next, let's examine the FS model analysis results and what specific trading strategies are needed in the U.S. stock market today. It should be noted that this model does not fully consider the impact of current market news and is merely a demonstration of internally driven trading strategies, not investment advice. First, let's model the top 200 stocks in the S&P 500. Today's trading activity is as follows. Stocks bought. None. Stocks sold. Guild 112.71. Stocks held. ASO 4179.84. MCK 691.62. BSX 106.66. WMB 57.38. KMI 26.74. LNG 240.86. WM 225.73. Over the past year, this strategy has outperformed the S&P 500 fund, SPY, by 16.24% in this group of stocks. Next, let's model the top 200 stocks in the S&P Midcap 400. Today's trading activity is as follows. Stocks bought. None. Stocks sold. OGA 44.54. Stocks held. TKO 185.35. UNM 70.03. Over the past year, this strategy has outperformed the S&P 500 SPY fund by 25.14%. Finally, we modeled and analyzed the top 200 stocks in the S&P Small Cap 600 Index. Today's trading actions are as follows. Stocks bought. None. Stocks sold. Coop 182.29. Stocks held. CNR 72.12. EAT 155.86. Over the past year, this strategy has outperformed the S&P 500 SPY fund by minus 1.04%. Okay, the above information is just a few perspectives on the market and does not represent the entire reality. Please consider all valuable information and consider your investment and trading strategies accordingly.